Hi everyone. Welcome to Level Up Dividends channel. Real estate investment trusts, or REITs, are a good option for investors who want to increase the income levels from their investment portfolios. These are businesses that hold real estate and lease it to tenants or invest in loans backed by real estate, both of which produce a consistent flow of income. The majority of their earnings are then distributed to shareholders as dividends. In today's video, I present the list of 9 REITs that offer really high dividend yield. Many of them have a dividend yield of more than 13%, which is huge. The majority of the stocks I present have an interesting upside potential. So if you buy them now, you will not only get huge dividends but also profit from their price appreciation. Before getting to the list, please push the like button in the video to help spread the video in YouTube and help grow the channel. I would really appreciate it. Thank you everyone. Now, let's get into it. Stock 1, KKR Real Estate Finance Trust. KKR Real Estate Finance Trust specializes in creating and purchasing senior transitional loans that are backed by institutional quality CRE assets. These senior loans have solid underlying fundamentals and are initially owned and managed by seasoned, well-capitalized sponsors in thriving markets. Dividend yield, 14.09%. Dividend safety, 40. Dividend growth, 12% per year in the last 5 years. Dividend growth streak, 5 years. According to analysts, the stock could reach $13.90, which represents an upside potential of 14%. Stock 2, Ellington Residential Mortgage REIT. The company acquires and invests in residential mortgage and real estate related assets. Ellington's primary area of interest is residential mortgage-backed securities, particularly those that are supported by U.S. government agencies or U.S. government-sponsored businesses. Dividend yield, 13.58%. Dividend safety, 9. Dividend growth, -8% per year in the last 5 years. Dividend growth streak, 0 years. Not many analysts cover this stock. Even though it looks like it's hovering around its mid-52-week price range, Ellington Residential has a P/E ratio lower than its peers. This suggests that the stock price is not overvalued. Stock 3, Global Net Lease. Global Net Lease focuses on sale-leaseback deals when investing in commercial real estate in the US and Europe. The trust owns well over 300 properties, the most of which are in the commercial, industrial, and retail sectors. Global Net Lease has a market capitalization of $1.1 billion. Dividend yield, 14.39%. Dividend safety, 16. Dividend growth, -6% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the stock could reach $15.60, which represents a huge upside potential of 40%. The fourth stock of my list is one of my favorite, Brandywine Realty. Brandywine Realty owns, develops and manages 163 sites in Philadelphia, Austin, and Washington, D.C. The REIT has a market value of $1.1 billion, and 74% of its operational income is produced in Philadelphia, 22% in Austin, and the remaining 4% in Washington, D.C. Dividend yield, 15.9%. Dividend safety, 40. Dividend growth, 3% per year in the last 5 years. Dividend growth streak, 13 years. Not only the stock price isn't at its peak, but it is also a low P/E ratio in comparison with its peers. It is likely not the optimum price to buy Brandywine at, but it's not a bad stock price neither. Stock 5, AGNC Investment Trust. AGNC is a mortgage real estate investment trust that invests largely in leveraged agency mortgage-backed securities, or MBS. Residential mortgage pass-through securities, collateralized mortgage obligations, and non-agency MBS make up the firm's asset portfolio. These are often supported by organizations that are supported by the government. Dividend yield, 14.41%. Dividend safety, 23. Dividend growth, -8% per year in the last 5 years. Dividend growth streak, 1 year. According to analysts, the stock could reach $10, which represents an upside potential of 7%. Stock 6, New York Mortgage Trust. The New York Mortgage Trust makes investments in financial and mortgage-related assets. The trust has certain troubled financial assets where it hopes to make capital gains, but its primary goal is to earn interest income from mortgage-related assets. The trust makes investments in joint venture equity, preferred equity, multifamily CMBS, and residential mortgage loans. Dividend yield, 13.3%. Dividend safety, 40. Dividend growth, minus 13% per year in the last 5 years. Dividend growth streak, 0 years. According to analysts, the stock could reach $10.40, which represents an upside potential of 15%. Stock 7, 2 Harbors. Residential Mortgage Real Estate Investment Trust, MREIT, 2 Harbors Investment Corporation. As a result, it concentrates on commercial real estate, residential mortgage loans, mortgage servicing rights, and residential mortgage-backed securities, RMBS. Dividend yield, 13.26%. Dividend safety, 30. Dividend growth, minus 15% per year in the last 5 years. Dividend growth streak, 0 years. According to analysts, the stock could reach $14.50, which represents an upside potential of 6%. Stock 8, Armour Residential. A U.S. government agency, such as Ginnie Mae, Freddie Mac, or Fannie Mae, may guarantee or issue residential mortgage-backed securities. Armour is a mortgage REIT that predominantly invests in these types of securities. Dividend yield, 18.79%. Dividend safety, 21. Dividend growth, minus 12% per year in the last 5 years. Dividend growth streak, 0 years. If we compare the stock's PE ratio with its peers, we'll find out that it is cheap. It could be an interesting timing to buy it at this level. Let's now have a look at my last company of this list. It is Orcid Capital. This company is my least favorite among the list. I'll explain the reason. Dividend yield, 19.03%. Dividend safety, 13. Dividend growth, minus 22% per year in the last 5 years. Dividend growth streak, 0 years. The company has a negative PE ratio of minus 33. A negative PE ratio means that the company is losing money. Among all today's list companies, Orcid is the only that has a negative PE ratio. That's why you should be careful and conduct more research before buying this stock. This is it. Tell me in the comments what is your best pick among these REITs. Mine is Brandywine Realty, as it offers an outstanding dividend yield that looks somehow sustainable. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.